Welcome to our lesson number 2 in the series of financial accounting. Just a link up of what we did last time. We came up with, or we look at the accounting equation, and we did mention that assets is equals to liabilities plus capital. And we look at some of the situation where asset increases, and we say that an increase in asset will be brought in by an increase in capital or by an increase in liability. So today I want to look at a balance sheet. In other words, some people or some books call it statement of financial position. Statement of the financial position will comply with the accounting equation. The accounting equation, we say that assets is equals to capital plus liability. This accounting equation are the items in this accounting equation are found in the balance sheet. In the balance sheet, we have assets, we have capital, and we have liabilities. Now, assets are divided into two categories. We have non-current assets and we have current assets. Non-current assets, they are those assets that can be used for more than 1 year. While current assets, they are those assets that last within 1 year. Similarly, for non-current liabilities, there are those liabilities that goes beyond a year. While current liabilities, they are those liabilities that runs within 1 year period. Now, coming up with the statement of financial position, there are two formats that are used. One, they also call it T format, is the horizontal format. Now, in this format, one side will have non-current assets and current assets as it is displayed. And then down there, we shall have total assets. On the other side, we shall have capital and non-current liabilities and current liabilities, and the total will be written down here. Remember, according to the accounting equation, the amount of capital and liabilities will finance purchase of assets. Therefore, the total assets here should balance with the capital plus liabilities. Then, non-current assets are items like land and building, plant and machineries, fixtures, furniture and fitting, and motor vehicle. These are non-current assets. Current assets are items like stock, some books call it inventory, debtors, cash at bank, cash in hand. And when it comes to non-current liabilities, we have loans. Those are the major non-current liabilities. Loans are the major non-current liabilities. Current liabilities, you have overdraft, we have creditors, and other items we shall see as we continue. That is a horizontal format. We can also draft our financial statement of financial position in a vertical format. A vertical format will look like this. We shall have current assets, non-current assets as they appear. You add current assets in a vertical way, then you get the total assets. Then these assets are financed by capital, non-current liabilities, and current liabilities. The total here and the total here will have to balance. So what are we saying? We are saying that non-current assets are listed in the order of performance as shown, from land and building to motor vehicles. The current assets are listed in the order of liquidity. A liquidity in the sense that they can be converted to cash. How liquid an asset is, it can be converted to cash very fast. Which asset is far from being converted into cash? Yeah. So you start with the asset that, but basically, in bookkeeping skills, you don't necessarily, there is no mark awarded in case you are doing an exam for writing this asset in any order. But for a professional way, there is a significance of expressing or drafting your asset in such a way that they are in order of liquidity. Example, stock is not yet sold, not yet realized yet. Then when it is sold, we get cash or debtors. Debtors, these are sales on credit. That means you have made your sales and you have not been paid. So those are debtors. And creditors, those are purchases on credit. You made purchases and you have not paid. Those are creditors or accounts payable. In advanced level, we shall call it accounts payable. The current liabilities are listed in the order of payment, which is due for payment first, but overdraft is payable on demand by the bank. Then creditors. Good. We have looked at the two formats of a balance sheet. Now we want to have an illustration here and insert our figures into our balance sheet. We can use the T format, can use the vertical format, but the sense is the or means the same. Illustration. Kamau has a business that has been trading for some time. You are given the following information. Building. We mentioned that building, these are non-current assets. Furnitures, they are non-current assets. Motor vehicles, non-current assets. Stock, these are current assets. Debtors, cash in hand, current asset. Creditors, current liabilities. You have capital. Loan is non-current liability. Therefore, with this information, I can easily insert this information into the format or into my balance sheet. Remember, we had this format here. We had this format. And we can use this to include the items that are in this illustration. Good. Let's look at it. The vertical format is the most commonly used format in most organizations. So we have said that we have buildings, non-current asset buildings, furniture and fitting, motor vehicles. So from the illustration, we have said that building, furniture, and motor vehicle, these are current, non-current assets. Then we have current assets, which are stock, debtors, cash at hand, and cash in the bank. If you add this and this, give us 76,600, representing the total assets. Financed by the capital, loan is the non-current liabilities, and creditors. If you add this, give you 76,600. This figure here and this figure here has to balance because we mentioned that assets are financed by capital and liabilities. Another illustration, D. Mwangi has the following assets and liability as on that 1st April 2012. So these are the assets and liabilities that exist. Creditors, this is non-current liabilities. Equipment, these are non-current asset. Motor vehicle, non-current asset. Stock, current asset. Debtors, current asset. Cash at bank, current asset. Cash in hand, current assets. Then during the first week of May 2020, 2012, Mwangi bought extra equipment. That means equipments were increased by 5,520. Bought extra stock by check. That means, remember of the double entry rule, when you increase equipment, you bought this one, bought extra equipment on credit. That means if you bought on credit, equipment will increase and the creditors will also increase because you have not paid. Bought extra stock by check. That means stock will increase and the amount of cash at the bank will reduce because you bought them by check. Paid creditors by check. You paid creditors, the amount of creditors will reduce, and then the amount of bank will also reduce because you paid by. We shall be coming to how to open up ledgers account for each and every item. But in a nutshell, I'm trying to say that when you pay creditors by check, the amount of creditors will reduce, and also the amount of money in the bank will reduce. Debtors paid that 3,000 by check and shillings 24 by cash. So these are debtors. These are debtors, we owe the money. So they pay you that 360, meaning that the amount of debtors will reduce by that 360 and the amount of bank will increase by that 360. And they also paid by cash, meaning that the amount of debtors will also reduce by 240 and the amount of cash will also increase by 240. Mwangi put in extra 1,000 cash as capital. That means the amount of capital will increase. Capital, we have not come up with capital. We shall come up with capital. Remember, we say that asset is equals to liabilities plus capital. We shall use that equation to get the amount of capital in this case. Therefore, Mwangi paid an extra, this one, cash, that means the capital will increase by 1,000 and the cash will also increase by 1,000. Good. So the question is, determine the capital as at 1st May 2012, before the month of May began. Therefore, you are asked to determine the capital from this information here. From the accounting equation, amount of assets is equals to liabilities plus capital. The only liability we have here is 15,800 of creditors. The rest are assets. So I will add all these assets, I minus liabilities to get capital. Therefore, using the accounting equation, assets is equals to liabilities plus capital, then asset and liabilities can be listed as follows. All these are assets, 148, 120, liability are these. Therefore, the difference will give me the amount of capital. Then you are told to draw up a balance sheet after the above transaction. Remember, I had mentioned that this purchase of this item brought in some adjustments. Yeah, brought in some adjustment in the sense that I was saying, for instance, if you bought an extra equipment of this one on credit, we say that equipment will increase, the creditors will reduce. If you bought extra stock by check, that means the amount in the bank will reduce and then the stock will increase. So this adjustment, when you make this adjustment, you shall have the net figures. Those ones are the one we are going to draw up the balance sheet for. Therefore, moving down here, you will find that to draw up the balance sheet, we consider the effect of the above transaction on the relevant balances. So buying extra equipment means that the equipment balance will increase by 5,520 and the creditors will also increase by the same amount because we bought them on credit. Buying extra stock by check means that the level of stock will go up by 2,280 and the bank balances will reduce with the same amount. Paying creditors by check reduces the balance on the creditors account and also reduces the amount of the bank. You have paid creditors, that means the amount of creditors has reduced, and you've used money in the bank, meaning that the amount of money in the bank will also reduce. And debtors paying the firm reduces the amount of debtors. That means you have a certain amount of debtors, they pay you, means that the number of debtors or the amount of debtors reduces, and you receive the money in cash and receive the money in the bank, their respective accounts will have to increase. As I mentioned, we shall soon look at how to prepare ledgers for each and every item. Additional cash of 1,000 increases the cash in hand balance, and 1,000 increases the capital balance. Therefore, the closing balance or the net balance of the items will be: equipment were increased by this one, we shall have this as the closing balance. Motor vehicle has no effect. Stock was increased by 2280. Debtors reduced by paying. Cash at the bank, we had a deduction, and at the same time we had an increase. This was from the debtors, these were for payments. Cash at hand, we had this one received from debtors, this one was for the capital, giving us this. Creditors, we had an increase in creditors for the equipment and the one that was paid, giving us this. Capital, we had this capital at the beginning plus 1,000 that was made at the end. Therefore, to draft your new balance sheet, we shall use the net figures that we have come up with. Therefore, non-current asset, we shall have equipment, motor vehicle, current asset, but we are using the figures after the adjustment. Remember the adjustment? The adjustment are very key. So you add this, you get 155, then current liabilities, add this plus capital, and then that will be the balance sheet after the adjustment. So adjustment is the key. So we have done a balance sheet, and in simple terms, balance sheet is necessary and has to comply with the accounting equation. That is the information or the lesson we did previously, lesson number 1, the accounting equation. So the concept of accounting equation come hand in hand in the balance sheet. And I mentioned that adjustments, most of the things that come in the exam for students and make students fail are these adjustments here. If you understand these adjustments, then preparing a balance sheet will be something very easy. Otherwise, appreciate your time in our lesson number 2. I look forward meeting you in lesson number 3 as we continue in this journey of accounting, financial accounting. Kindly subscribe so that you are alerted when the next lesson is uploaded. Thank you and welcome.